Hello, ladies and gentlemen. My name is Jarek Modziewski from S&P Global Commodity Insights, and I'd like to welcome to the latest of our Asia time zone friendly metals webinar series live from Singapore at 2 p.m. Friday, the 20th of June. I trust that you're all keeping healthy and safe. We appreciate you joining us today for this call. Today's webinar leverages expertise from S&P Global Commodity Insights Metals Analytics and Metals Pricing teams. A little bit of housekeeping I know I need to cover for this webinar. When the webinar begins, the audio will be live streamed through your computer, so be sure your speakers are on and unmuted. A friendly reminder that we're providing the Chinese and Japanese interpretation service today. You may find the live translation widget on the right-hand side corner of the platform. If not, you can also find it at the live translation button on your On24 menu below. Please click the headphones icon to select your translation language, and it should automatically mute the original audio from the presenter. Feel free to use the chat feature for any questions or comments. We will address them during the Q&A session. If we do not, we will respond via email after this webinar. You are welcome to download valuable files from the resource list section on the left, and please take a few moments to fill out our short survey. The survey box will pop up on your screen at the end of the webinar. We appreciate your feedback and use it to help ensure that we meet your interests and needs. We encourage you to participate and engage with the content. Your input is valuable, and do make use of our reactions buttons on the bottom panel. If you are a current subscriber of S&P Global Commodity Insights Metal Service, the webinar and slides will be available to you on Platts Connect a few days following the webinar's conclusion. If you do not currently subscribe to a metal service, please do contact us via the demo link on the left-hand side of the platform, and we'll be able to provide you a copy of today's slides. Just some antitrust. We, of course, follow and are in compliance of all antitrust legislation. So S&P Global Commodity Insights actually only forms one of 5 divisions. We follow S&P Global Commodity Insights, S&P Global Market Intelligence, Ratings, Mobility, and Dow Jones Indices. At S&P Global Commodity Insights, metals forms one of many commodity products that we follow. So if you are interested in learning more about products such as LNG, metals, refined crude, oil, petchem, shipping, and so on, please do get in touch with us, and we'll be happy to have a chat around our capabilities. If you are a current subscriber, you may be aware that customers for CF7 Plus late last year have had access to our new Aluminium Analytics report. This covers both alumina and aluminium markets, with both of our speakers, two of our speakers contribute to, amongst others. We forecast the supply, demand, and price of aluminium and alumina up to 2035. Please do get in touch if you are interested. Among some of the spotlights that the aluminium team have recently released, they talk about the new details around Emirates Global Aluminium's planned $4 billion greenfield aluminium smelter in the US. Well, just today, our news teams have released a story around Canada implementing new aluminium steel protections to counter US duties. So let's introduce our speakers. We will be kicking things off with Jensen Ong, team lead for non-ferrous metals pricing in APAC. Jensen's main area of focus is the aluminium value chain, nickel, and ferroalloys markets in APAC. Jensen today will be covering alumina and Asia aluminium, providing market updates and covering our methodology. Following Jensen, Karen Norton will be looking at the outlook for the aluminium market in a challenging landscape. Karen is a principal analyst and brings over 30 years of experience to S&P Global Commodity Insights, joining the team in 2024. To finish things off for us, we'll have April K. Sorrento discussing volatility in the alumina market. April joined us in 2024 and is closely involved in developing our asset level databases. In between working With all of this, she also just happens to be working towards her PhD in her free time. Thank you for all of your time today, and I am now pleased to hand over to Jensen. Over to you, Jensen.
Right. Thank you, Yarick. Hi, everyone. So I'm Jensen Ong. As Yarick introduced, I lead the team in Asia for the base metals and ferroalloys pricing. So today we'll be updating on the spot market for the alumina and Asia aluminum markets, as well as an overview of what price assessments we cover, and also an update on some of our methodology explained in that sense. Because I do see that from this attendee list, there are quite a lot of you who have, I think, are very familiar with what we do at Platts here in terms of our price assessments, but there's also a significant number of attendees who are either new to this market, fairly new to this market, or could be new to the alumina and aluminum market in particular because of the new production where we see in Asia itself, whether it's Indonesia or China itself. So thank you very much. 来自国内的朋友们和市场参与者们，谢谢你们，就是今天抽空来参与我们这个研讨会。然后 to our friends from Indonesia as well, salam sejahtera dan selamat siang kepada kita semua dan terima kasih kerana menjaga kami pada hari ini di petang ini. Right, so some of our global benchmarks that we have across our Platts commodities assessments, of course, we have, besides metals itself, we have alumina, aluminum, our iron ore, IODEX benchmarks as well as a lot of our oil benchmarks across the board for Brent, gasoline, Platts Dubai, for example, Japan, Korea market, JKM for LNG itself. For metals in particular, across the globe, of course, we have both our non-ferrous and ferrous benchmarks, whether is it for steel and scrap, for example, for battery metals as well. And also, of course, in the West, we have our big benchmark for the US aluminum Midwest premiums. A lot of attention on this market recently due to the ongoing developments in the tariff space. And we'll unpack a lot of these spot market updates and also forecasts that we have between myself, Karen Norton, and April as well through this presentation. For those who may be pretty new to our Platts price assessments, just to underline like some of the key metrics or ways that we assess prices. I think some of the key points that we look at when we assess prices across all commodities that Platts has is that the quality and transparency of information that we receive are very critical to how we assess prices in a more robust manner. So these like examples of these qualities or like traits that this data assessments Hertz recorded information that we receive are like data points that are transparent, verifiable, and also firm, repeatable and executable. So some of the key ones that we look at, of course, is transparent in the sense where is this a trade, bid or offer open to the market? Does the market know who is bidding or offering or trading in the market? This helps to boost the trust and understanding of where the market fundamentals are currently. And in terms of verifiable and repeatable as well, where we see a lot of trades that may be done at different levels, we strive to come to a price assessment where it reflects the market fundamentals in the sense where this price is repeatable across a broad set of market participants, whether they are buyers, sellers, producers, consumers, or traders, for example. In terms of how we rank information that we receive and how we prioritize them for our price assessments, of course, at the top, we have the reviewed market on close process, reviewed MOC, where this information takes precedence in general where participants have completed the MOC participation review. So in that sense, where these participants have been reviewed in terms of financial ability to conclude deals and whether they meet a critical mass of tradability with different market participants across the board. Of course, for the alumina and Asia aluminum markets, this review MOC process is not so prevalent yet. Most of the market information received for alumina and Asia aluminum fall into the second category where it's direct confirmed data, where market participants report officially in terms of a email report in black and white to us for full details of trades like loading periods, laycans, locations, specifications, so to see that whether this cargo or this trade falls within our specifications for alumina or Asia aluminum. And of course, lower in the ranks of information, we have like past tender results or price indications that we receive in the market. In the event where there are no, like say, firm bids, firm offers or trades in the market, we may fall back to other information in the market to assess whether we may keep prices steady or move prices. So even notional values do provide a clear, in a sense, they provide a very good value in terms of how we assess prices as well when the market is either flat, on the day itself, when there are no trades itself, we do look at market fundamentals or even adjacent markets to see like whether prices have moved in a certain manner to assess if the prices have been trading up or down in that sense as well. So across our global aluminum value chain price assessments, of course, we have our benchmark Platts Alumina Index, mainly the FOB Australia, FOB Brazil differential, also known as the Atlantic differential AD, our CIF China alumina prices, as well as our CIF China domestic ex-works prices within China itself. On the primary aluminum side, of course, in Asia itself, we have the MJP, main Japanese ports, spot and quarterly MJP premiums, our fairly newly launched MAP, main Asian ports premium, basis CIF Incheon, South Korea, was launched in 2023. So I would say it's fairly new, but not that new as well. And of course, one of our longest standing benchmarks in the aluminum space, which is the US Midwest Premium, MWP. And in Europe itself, we have our Rotterdam premiums for in-warehouse, duty paid and duty unpaid. And most very recently, January this year, we also launched our Asia low carbon aluminum premiums for Japan and Korea markets, Japan and Asia markets itself. I think in terms of the relevance or the importance of launching these prices is to show that we recognize or we acknowledge that there's increasing transactions and increasing liquidity in these markets within Asia itself, where the premiums in Asia for low carbon is now the highest globally compared to the US as well as compared to the European markets, due to increasing demand from Japan, China itself, Vietnam, Thailand, for example. These are some of the key markets that we observe having increased demand for and ability to pay as well for the low carbon aluminum premiums. Zooming in on the alumina space, we have our FOB Australia benchmark. We assess this daily. It was launched in 2010 August. The first daily alumina spot price in the market assessed on a daily basis. The FOB Australia benchmark is now also used to settle, in recent years as well, been used to settle contracts, not just in Australia, but even for like FOB Indonesia trades, FOB India, FOB Vietnam, for example. Whereas for the FOB Brazil differential, this is basis FOB Brazil, but it's also used in several other origins within the Atlantic Basin, whether is it in Spain, whether is it in Jamaica, for example. And this is applied as a differential to the FOB Australia. And this differential has remained at a premium in the recent 1 or 2 years, I would say. For the Chinese market, we have our CIF China aluminum prices, which is also assessed daily, and our domestic China exports markets prices basis the Shanxi province in China, where we observe to have the most liquidity in terms of spot trading activity. This is a sample of reported trades that we receive on a day-to-day or week-to-week basis, depending on the market liquidity itself. We collect information such as lay days, volume, the origin, price, Incoterms, payment terms as well, to see if these trades do fall within our specifications in terms of how we conclude or use them for our assessments itself. A sample of what the trade report template that we started recently for newer market participants, of course, would show this information being collected and sent to us as and when the trades or bids or offers are being done in the market. On the aluminum side, we have, of course, our spot MJP, quarterly MJP, and MAP premiums. This specifications is quite a wordful, but we have all of these information available to the public on our website as well. Newly launched, low carbon aluminum premiums for Japan and Asia itself. We mentioned earlier as well, where we do accept this new trade flow in terms of low carbon aluminum premiums for Japan and Asia itself. The low carbon specifications are similar or the same as what we assess for the European and US markets as well. So there's no new changes to the particular specifications, but there's new price launches for the Asia market itself. Right. So in recent times, of course, in terms of the spot market fundamentals, we'll start off with the spot markets, but for the forecast and analytics, I'll pass the time later to Karen, Norton, and April. In the current spot market itself, I think there's a lot of attention right now on the ongoing Israel-Iran conflict in the Middle East itself, where we did see some of the Indian cargoes that were initially supposed to be sent to Middle East being rerouted away to the Asian market itself. I think notably, we had one trade that was shipped on a CIF Indonesia basis, and net back to a FOB India 361, 362 level for the one of the Indian cargoes. But of course, because we know that these cargoes are, would say, distressed or prompt, they are loading either this week, within the week itself. So it's out of our assessment window, but in the sense where the market does see that the rerouting of these cargoes to the spot market could provide some pressure onto the aluminum market as a whole, on top of the new Indonesian capacity that's scheduled to already coming online or scheduled to come online in the next couple of months or so. But having said that, of course, the market does see that the current levels of, let's say, 363 FOB Australia levels is a level where we see buyers and sellers being willing to transact. We had several trades over the past few weeks that have been range bound in the 360 to 370 range, FOB Australia on equivalent itself. So we do see at this level being a level where the buyers and sellers are being able to accept in the near term itself for now. But of course, moving forward, we may see that Indonesian supply coming online that may push prices slightly below this level. Market participants have feedback that the increasing capacity within Indonesia itself could ease some of the supply pressure down the road itself. But of course, having said that, we do see new refinery projects in Indonesia itself. Some of these projects have been facing some delays, as I think many of us would know. So some projects are going on time, but not all are going as per earlier schedules of commissioning. In terms of, like, say, we just heard this morning for Bintan Alumina Phase 3, there may be slight delays in terms of the first cargo itself is scheduled to be loading later than expected. I think earlier there was expectations that this first cargo would be loading in June itself, but we understand from this morning that the first cargo is expected to be loading closer to the August month itself. And we expect this cargo to remain within the Southeast Asian region, meaning that the buyer will be of a Southeast Asian origin buyer as well for the first cargo. And for the other projects we have for Xinjiang itself, we have seen them ship 2 cargoes at least to China itself to test quality for the earlier stages as well. We do hear other Asian buyers being keen in terms of the backed production that they are producing at the early stages. So we may see some of these smelters stepping away from the spot market a little bit as well, because they've probably signed a few term contracts or short-term contracts with the new Indonesian refineries. Another development in the market itself for alumina that the market participants have been looking very closely at, of course, is the recent months developments in Guinea itself, where we do see that there's been latest cancellations of some of the mining permits in Guinea itself, across not just for bauxite but also for nickel, for other like gold commodities as well, for example, in the region. So we do see that this could have supported prices in China a bit, because China is a main buyer of bauxite from Guinea. But having said that, we haven't seen a big surge in the Shanghai Futures Exchange alumina prices in China itself. So it could reflect that Chinese market participants are either getting less reactive to this news of Guinea disruptions, or they do expect that more projects will come. The reason why we say that is because despite the cut in the export suspension of GAC bauxite in August 2020, bauxite volumes exports from Guinea continued to increase after that to record high levels in April that we observed as well. China imported 159 million tons of this Guinean bauxite last year, with 70% being Guinean origin. So we do see that Guinea continues to be a big player in terms of exports to China for Guinean origin bauxite itself. So speaking of the Chinese market participants, of course, we do note that they're getting a bit more neutral. Chinese market participants are getting more neutral or less sensitive to news of Guinean disruptions, because they do see that when one mine stops exporting, they see other mines opening up and also exporting. And there are a lot more projects down the line from, let's say, SPIC, Chalco, even like Winning, for example, in Guinea, where it's expected to increase bauxite production and exports down the road as well. On the aluminum front, we do see output, of course, increase year-on-year last year. In particular, for China itself, we do see that the Chinese aluminum production continues to creep closer to the theoretical production ceiling of 45 million tons. Last year, they produced 43.4 million tons, which is also an increase of 4% year-on-year compared to 2023. So in that sense, on one hand, we do see Chinese aluminum production still creeping upwards. But the key trend here is that Chinese market participants are increasingly, let's say for Nanshan or Weiqiao, increasingly look to invest in regions out of China itself. For example, for the Nanshan Well Harvest or Huafeng Qingshan investments in Indonesia itself, upcoming smelters, including also Ligen, Xingfa in Indonesia. We do see a lot of these main big Chinese players branching out from China to Indonesia, and also even players who are not from the aluminum space, like Ligen, for example, who's actually currently a major nickel producer, looking to branch out into the aluminum space in Indonesia itself. And a lot of these new production, of course, it's centered around, for the Chinese companies, centered around the IWIP, which is Tsingshan's industrial parks in Indonesia itself. So we do see a lot of these new investments being driven into these two new parks for both Tsingshan, Xingfa, Huafeng, for example. And on the other hand, of course, we still see a lot of production coming up also in the Kalimantan area, where it's more rich with bauxite and alumina production down the road. So these key areas within Indonesia is where we would expect a lot more production coming up down the road. And of course, we don't forget as well where we had the news of pressed metals, new Kalimantan Aluminum Nusantara refinery also having its foundation laying ceremony in the past 2 days as well in Indonesia. So we do see definitely a lot of new projects coming up online over the next couple of 1 or 2 years in that sense. For spot aluminum premiums itself, we do see them going down on this downtrend itself, of course, led by higher inventories in Japan itself, and also industries like construction, automotive sectors being laggards in the demand side. On the earlier part of this year itself, we did see prices spike early on due to supply concerns within the Asia space itself, when earlier on there were news that Australia may get tariff exemptions from the US tariffs. But once that was proven to be not true, we did see spot premiums collapse quite quickly from that level, because it showed that Australian metal would no longer be expected to be delivered to the US as earlier expected. So in the current MJP space, of course, in our last trip to Japan last week as well for myself and my colleague Louisa Liao, we did speak with a lot of the Japanese market participants who had very similar views in terms of where they are seeing the Japanese demand, which is not strong, and they do expect that the current spot premiums of $85 MJP to be reflective of the demand within Japan itself. And of course, we do see a lot of producers or sellers disagreeing. They do see that despite the weak demand in Japan itself, the ongoing Israel-Iran conflict may push up, of course, premiums in the Rotterdam area, which would also support premiums in the Asian side as well. But for the Q2 and Q3 MJP itself, of course, the first deal being concluded at 122, we are still waiting for further transactions to be done for the Q3 MJP negotiations. Latest offer heard being at $130 per metric ton. We haven't heard new trades after the 122 deal, namely because right after the 122 deal was reported, US announced immediately an increase of tariffs to 50%, which put a lot of buyers and sellers both on the wait and see, on the sidelines itself, on the wait and see mode. So we have not seen a further good progress on the QMJP negotiation side. I think a lot of market participants expect the Q3 MJP negotiations to now extend into the third quarter, which is July itself. So that's where we are still seeing the market progressing for negotiations at this point of time. For the low carbon premiums, we do see a lot of traction gaining, especially since we launched the assessment in January this year. We have a low carbon premiums for, let's say, for Japan at a $60 premium on top of the LME cash plus QMJP, which is the highest globally compared to US, where it's close to zero, in Europe itself, where it's range bound from, let's say, 10, 15, 20. One of the reasons, of course, is because the relatively fewer suppliers of low carbon aluminum they are certified within the Asian region itself. We have, of course, Malaysia, New Zealand, to some extent as well. We have the certified Russian brands, low carbon production, some in Indonesia as well. But having said that, there are very limited supplies of Asian low carbon aluminum, which is why we do see that buyers who need the material and who need certification would have been able to pay a large premium on top of the QMJP Japan premium levels at the current level. So in the last trip to Japan, of course, we do hear a lot of talks of more buyers looking to be keen, whether it's material from not just from Asia, but even material all the way from Brazil through the Japan NAAC, a joint venture where we expect more Elbrus material potentially getting this low carbon premium as well down the road. So at the current point of time, we do see it because of the high premiums of low carbon premiums within Japan or rest of Asia as well. We do see a lot of producers are looking to get certified in terms of how they get their certifications across the board that is accepted by a lot of buyers within Japan and Asia, who then either produce this material and re-export this material to Europe or sell them to the downstream automotive sector in that sense. So just across the board, just to cap off some of the introduction overview of our aluminum prices, of course, we have our forecasts coming right up from Karen and April, and also our Q&A section, which I think will be able to answer a lot more questions. But across the board, of course, just wanted to cap off to introduce and also summarize that we have our alumina benchmarks, US Midwest premiums, and also our MJP benchmarks across the global aluminum chain. We did see our Midwest premium in the US gaining record high numbers of unprecedented transparency and hertz in terms of bids, name offers, and named trades within our MOC window in the US. So, of course, thank you very much for our market participants for being supportive of our bid to increase transparency and understanding of the market. And now I'll pass the time to Karen to go into more in-depth review of our forecast for aluminum.
Thank you, Jensen, very much. Hello, everybody. Today, I'm going to talk about the outlook for aluminum in what is a very challenging time in terms of trade tensions that are escalating. And against that backdrop, we'll be looking at the prospects for supply, demand, and regional premia. First of all, a quick overview of the price performance in recent years. Obviously, we can see the peak in early 2022 as a result of the Russia-Ukraine conflict, which prompted concerns about supply shortages, disruptions. Those concerns dissipated quite quickly, however, and prices retreated and have since then pretty much traded in a fairly narrow range. Most latterly, however, the escalating trade tensions, we have seen prices fall below $2,400 per tonne. But as those tensions eased, with talks ongoing, prices were able to rebound slightly as a result. But at the same time, it has to be said that demand concerns do continue. Here, we're just taking a quick look at the macroeconomic backdrop. And we can see on the right-hand side, the revisions that were made to GDP growth forecasts globally and for key consuming regions of aluminum. The most significant downgrades by S&P Global Ratings, as we can see, were to China in 2025 and 2026, and also to the US. So honing in more specifically on the aluminum market, we can see on the left-hand side the chart showing the performance of China's construction industry. It's the biggest end-use sector for aluminum demand in China, and hence, as a result, for global demand. And it's a pretty soft picture in recent times, and we do not anticipate a significant recovery from there in the next 2 to 3 years. Having said that, on the upside for demand, the energy transition sector has been a driving force in recent years. On the right hand, we're specifically looking at the solar sector as being a key driving force for demand, primarily being used in the panel frames. And we can see the strong growth, year-on-year growth that was recorded in 2023. Again, China being the main factor behind that, but it's a strong growth picture across the board. Those levels of growth are slowing, but it's a bigger sector now, so the impetus remains positive. Aside from solar, the aluminum is used extensively in electric vehicles, and again, China being a key driver there with the strong performance continuing. Light weighting in aluminum remains a key factor as just to keep the weight of the cars down, its use in the body in white and also in battery housings. Now, taking a look more specifically at the US, it's been the key area of focus this year with the tariffs that have been implemented. First for 25% on imports, which already was causing concern for demand, and then the doubling of the tariffs more recently in very short order. Saw the US Midwest Premium, the Platts assessed benchmark, soar to above 60 cents per pound. And since then, it's retreated to about 50, 51, 52 at the moment. But the market remains concerned, not only about what this means for imports, but also for the stocks that are in the US and rapidly becoming depleted. The expectation at the moment is that those stocks in US warehouse at Owensboro could be depleted by the end of July, which could see the premium soar to the high 60 cents per pound or even 70. Which is causing great concern for the prospects for US consumers and manufacturing. The other concern is, where is the metal going to come from? Canada, as Jarek mentioned, is taking action. Canada is also by far the biggest exporter to the US, accounting for about 70% of imports. As we mentioned, the concern also for the impact on demand, and that is something that we have factored into our forecasts in terms of lowering our demand forecast for this year. So a quick look at US imports, unbought imports in the first quarter. As we can see, Canada remained a major exporter during that period. The numbers were slightly down on last year on a year-on-year basis, but were up on 2023. So on that basis, not giving great cause for concern. But the metal from Canada is potentially going to be diverted increasingly to the EU, where it will be very welcome as a hydroelectric power source for the smelting, will be welcome ahead of CBAM. At the same time, we can see that exports from the UAE have risen sharply. It's dwarfed by Canada, obviously, but it could be the sign of a growing trend, having doubled in the first quarter and likely to increase further. Bahrain and India have also increased their exports to the US more recently as well. Interestingly, against this backdrop, we have Emirate Global Aluminium announcing recently that they're planning to build a greenfield smelter, a 600,000 tons per year smelter in the US, which raises the question whether that might have an impact on tariffs for the UAE. As we know, Canada and the US are talking, and there are concerns in other quarters that there might be a deal which would see the tariff on Canadian metal lowered or rescinded. So again, that it's all up in the air at the moment, but very much a moving picture. Here we just take a look as well at the Japan CIF spot premium, another premium that we have started forecasting more latterly in our monthly report. Latest numbers are 85 cents per pound, and the premium has been under severe pressure since recording a 9-year high earlier this year, with the concerns of Australian material being diverted to the US. The picture here is a soft one, a weakening one at the moment. Auto demand the auto sector is by far the biggest end-use sector in Japan, and concerns are for exports to the US as a result of tariffs. At the same time, the construction sector is soft at the moment. There aren't many projects going on outside Tokyo. So we expect the downtrend or premium there to remain under pressure for the time being. Just taking a look at alumina in relation to the aluminium price. My colleague April will be talking in more depth about alumina, obviously, in the next presentation. But as we can see, the alumina price, which reached record highs in December, peaked in relation to the aluminium price at 27% of the price in the fourth quarter, way above the normal levels we would expect to see, for instance, 14% in 2022 to 2023. And that put pressure on aluminum smelters. In that period, we saw that Rusal announced production cutbacks, which partially were attributed to the alumina price and the record highs that we're seeing. As we can see, those levels have since eased back considerably to more normal levels, and that has eased the pressure on aluminium smelters' costs in terms of the alumina price, at least. Keeping on supply, we take a look at the regional growth patterns in aluminum output in the years to come. Again, we mentioned the US smelter in Emirates Global Aluminium Smelter project, but also Century Aluminum has a project. The issue there is that securing a power supply at a reasonable cost, that has been the reason for the swathes of capacity in the US that have been shuttered, idled, and permanently closed in some cases in the country. So we're looking for slower growth in coming years from primary aluminum supply. It's China that has been the key growth driver over a number of years, but it's going to have to be other countries that take up the mantle soon, with China aluminum capacity fast approaching the 45 million tons per year capacity cap. Most recently, Indian producers have announced major projects, as well as Kazakhstan announcing a project there. So there are potential growth areas, but at the moment, we are waiting for those projects to be committed. Again, this chart highlights the influence of China in the period 2020 to 2024. It was the biggest contributor to supply growth over the period. But as that capacity cap we mentioned comes in, the growth will have to come from other areas. Essentially, other Asia, as mentioned, will be a major force, but potentially also Africa as we get towards the latter part of our forecast period. We could see some projects there. EGA has announced its potential development in Ghana, and we are looking for other areas of Africa to potentially take up some of the growth as well, probably Guinea as the country looks to move downstream as well. While we focus on primary aluminium, we also need to think about the importance of recycling in the current environment. The pressure on, or the need for more recycling is clear. In the US, these are numbers from the Aluminum Association with some lag, but it highlights the need for more recycling. In the US, the recycling rate of used beverage cans, which are the lowest hanging fruit in terms of recycled material was just 43% in 2023. It's been on a downtrend essentially for a number of years and remains disappointing at these levels. So while those levels remain weak, we are looking, and the market is looking for some sign of pickup. And it seems that the next couple of years will be critical to indicate whether the impetus is there for recycling to gain more upside. And here, just looking at our forecasts for supply demand over the next few years. Essentially, at the start of the year, we had a very small surplus of just 19,000 tons. But with the concerns over the impact of tariffs on global demand in export markets and also in the US itself, we've raised that surplus forecast this year to around 300,000 tons, and looking for similar surpluses over the next few years. But at the same time, the switch to deficit we expect in 2028 as the slower supply growth starts to get factored into to the picture. So see potential for prices to start picking up more, gathering momentum in 2027. So essentially, it's challenging times for the market, but at the same time, the surpluses are not huge in a market of 73 million tons approximately. So overall, a surplus for the next few years, but beyond that, we're looking for some pickup. And with that, I'll hand over to April.
Hello, everybody. Thanks very much, Karen. Hello, yes, I'm April, and I hope you've enjoyed the discussion of my fellow colleagues. I will now start with my discussion, focusing on the market, the aluminum market research and analytics. In this presentation, I aim to answer the question, will volatility continue in the aluminum market, focusing primarily on our projections for the supply, the demand, as well as our price forecast for Alumina FOB Australia. But before I proceed with our projections, I'll first give you a brief recap in history of what's happened in the market or what's happening in the market that actually led us to our forecasts. So let's start. I have here the price chart for Platts Alumina FOB Australia, and you can see here the different events that has pushed prices to its peaks or its bottoms, but I'll focus more on the recent past and up to date. So in the past year, we've seen how the prices have rallied because of multiple supply problems in Australia. There's also the bauxite problems in Guinea and other regions. All this have actually piled up and pushed prices to a record level of around $805 per metric ton as of December of 2024. However, when the news of Rio lifting its force majeure on its alumina exports from its Queensland refinery, prices have started pulling back, and it continued declining with the news of new alumina capacity, mainly coming from Asia, but also from Africa. It reached a bottom at around April of 2025, sorry, and it slightly bounced back when Guinea revoked multiple mining licenses. Now let's look at the performance of the market for the first quarter. We have an average of $515 and $500.62 per metric ton for Q1, and that is actually a 40.5 huge jump on year for Q1. Just in comparison, we are comparing it from Q1 of 2024, just prior the supply problems, because Kwinana and the force majeure actually started in Q2 of 2024, thus the huge jump for the year-on-year change. On a quarterly basis, however, there is also a significant decline of 26.5% because we are comparing Q1 of 2025 to the Q4 of 2024, where price levels actually picked at that time, as I mentioned a while ago, at $805 per metric ton. So next, I think a more relevant topic in today's age is the trade. And I'll be starting with the raw material for alumina, which is bauxite. So the top consumer, China, which is also the biggest importer of bauxite, have had a total of 47.1 million metric ton of bauxites imported. And that comprises around 90% of the global total bauxite imports. And that also shows a surge of 30% on year. This surge, or 30% surge, can be attributed to the expected supply coming online in China. We're actually expecting around 13 million metric tons of supply coming into China solely. Now, looking at the trade map on the right, I have here the top 5 bauxite exporters. And on the top of that list, we have Guinea at 38.6 billion metric ton for Q1 of 2025. And that comprises 74% of the world's total exports. You would also notice that there is also a huge jump of 27% on year for Q1 of 2025. This is mainly because the top export destination of the Guinean bauxite export goes to China. China comprises 94% of the total exports from Guinea. I think from this you can see how China is becoming extremely, or is growing its reliance on the global bauxite global bauxite imports, specifically from Guinea, and how Guinea is becoming an extremely critical player in the whole aluminum supply chain. Um, to point out some of the reasons why this is the case is that, number one, because of the attempt to actually lead the green transformation and to achieve like sustainable development in China, it has implemented stricter environmental regions domestically that has made the bauxite the bauxite it has made the development of the bauxite mines, or even sustaining these mines, quite difficult. So the strategy for this is actually, or there is actually a need for China to strengthen its resource security to maintain its position in the supply chain. And for China to do that is for it to expand its influence in the global scene. And by expanding its influence in the global scene, it has to anchor its hold on the major sources of bauxite. And in this case, you can see Guinea. But at the same time, China is also investing huge amounts in Indonesia, who has a considerable amount of bauxite reserves as well. And in my opinion, China has been quite successful in this this expansion because also of two reasons. One is it has been having mutually beneficial agreements with the source countries. Second is that it's implementing vertical integration. By vertical integration, it's not only developing the mine, but the whole the whole process stream from the upstream bauxite mines, the refineries, up until the downstream processes, the smelting of aluminum, up until the production of aluminum products. Now let's proceed to our trade for alumina. We have here on the left the top 5 alumina importers globally. It is shown in the white field circles bounded by blue lines. On the top of the list, we could see Canada, and Canada has had a significant, notable decline of 6% on year for Q1 of 2025. And this decline can actually be attributed to the trade challenges or the growing trade tensions that's being experienced by the market right now. As you see, as trade tensions grow, um, market uncertainty also grow. And if there's uncertainty, producers can become wary of producing more. So they tend to limit their production. And with limiting the production, um, it lessens the demand for alumina, because the biggest indicator of alumina demand is, of course, the production of aluminum. And it is reflected in this decline in imports by Canada. Moving on to the right trade map, we have here the top 5 alumina exporters globally, and it's being led by Australia at 3.5 million metric tons, comprising 36% of the global total. Similar to Canada, there is also a significant decline in the Q1 exports of Australia, also attributed to the trade challenges experienced by the market. And at the same time, it already reflects the closure of some of the plant in Australia, Kwinana, because I've mentioned a while ago, supply problems started in Q2 of 2024. So as of Q1 of 2024, there was the operations in Australia were still at normal levels. Another thing that I'd like to point out in this slide is how the growing trade tensions are affecting the trade route that Karen also mentioned a while ago. You would notice in the alumina importers trade map how Singapore, which is a non-alumina producing country, has become part of the top 5 exporters to Canada. And if we are to check the source of alumina in Singapore, you would see that China owns majority of the alumina products in Singapore. And this only shows how Singapore was used as a strategic location, given that it has a free trade agreement with Canada to avoid being tariffed because of the or like to have like cheaper costs. Another thing I'd like to point out is China is on the exporter side now belongs to the top 5 exporters, when China historically has been a huge importer of alumina, but because of rallied prices from last year, they continued to the early part of this year, China has been encouraged to export more rather than import. Now let's proceed to our market projections for the alumina supply. As I've mentioned, there has been a lot of ramp up in capacity in Asia and Africa, but to be specific, some of it was mentioned by Jensen. We have the Mimpawa, the Bintan in Indonesia. We also have Vedanta in India, the 13 million metric tons that we expect this year to come online in China, and some other regions in Africa and Southeast Asia as well, smaller scale. That's why in 2025, we forecast an average of around 152.5 million metric tons for alumina. That's a 3.8% growth from last year. And we also expect that within the time range of 2025 to 2027, growth of production will be rapid, because this is the time range we're in. Most of the expansions or the new projects in aluminum will be completed, and then thereafter, growth rate will slow down by 2028 and 2029. Now, what I have here on the right chart, the aluminum production, is something that Karen has already introduced a while ago, but I'm introducing it back here in the context of alumina, because aluminum is the biggest indicator of alumina demand. and that 94% of alumina is actually used as a feedstock to the aluminum smelters. If you were to compare both charts, the alumina growth pace for 2025 to 2027 is somehow gentler than that of the alumina. This is because this China smelter output is nearing its capacity, and at the same time, I've mentioned about the market uncertainty brought about the growing trade tensions that limits the producer's capacity to actually um, increase it because of the wariness or the uncertainty. The tendency of producer is to control their production, thus the slow growth. But you know what? By 2027, we expect that aluminum growth rate will outpace that of alumina production growth rate by only 0.1%. By 2027, we expect that alum growth rate would be 2.3%, while that of alumina would be 2.2%. In 2028 and 2029, we believe it will continue the outpacing of the growth rate. For 2028, it will be 1.9% for aluminum and a 1% for alumina growth rate. And for 2029, it's going to be a 0.9% and 0.7% for alumina. This growth rate is actually important in my discussion about the market balance. So I have here our projections for the market balance as well as our forecasts for the Platts Alumina FOB Australia. Because of all the supply problems experienced in 2024, we've reached a huge deficit of around 2 million metric tons in 2024 that has pushed prices to its peak. However, for 2025, we expect that the market would be slightly surplus, and this in return would put downward pressure on the Platts Alumina FOB price. We forecast it to be around $442 per metric ton for 2025. We expect the surplus to grow and pick in 2026 to approximately 1 million metric ton. But by 2027, since I've mentioned that there will be an outpacing of growth rate by aluminum compared to that of alumina, you can see here that 2027 is somehow becoming the turning point before prices bounces back. This trend will actually continue somehow, such that the market will approach a more balanced state, further pushing aluminum prices up in 2029. Well, of course, this projection will depend most likely on the success of Guinea and Indonesia's downstream strategies. And on the long term, we expect that the energy transition and the decarbonization goals will somehow be pushed up at a later time, but will pick up, and that will also like carry the demand for aluminum and consequently the demand for alumina. So that actually concludes my presentation. To sum up, we are expecting a surge in alumina capacity this year and even up until 2027, which will soften the prices for those periods. However, we are also cautious, or we also expect some sensitivity due to the possible bauxite supply disruptions in Guinea or other source countries. And lastly, sustainability, vertical integration, and supply chain security are the central themes across expansions. So that's all. Thank you very much. So I'll be giving it back to Yerrick.
Thank you very much, April, Jensen, and Karen. Now, we do have some time allocated for Q&A, so we won't be able to go through all of your answers, your questions, sorry. I'll endeavor to ask Karen, April, and Jensen. So, first question, Karen. This one is in regard to aluminium and bauxite. So the question is, bauxite has been one of the major dynamics for recent alumina price fluctuations. Why isn't bauxite included in the analysis? So April did touch on bauxite briefly, but I imagine the question is more around how come we don't have pricing, how come we don't have S&D outlooks for bauxite. Over to you.
Hi, yeah. It is something, as you saw in the presentation and Jarek mentioned, we do look at bauxite. We can't ignore its impact on the alumina market, especially with what's going on in Guinea. But at the moment, we don't provide a supply-demand balance. It is something that we are working on at the moment in terms of both pricing and perhaps Jensen might want to touch on that, I'm not sure. But we're looking at seaborne third-party trade for a supply-demand balance. And as mentioned, something we're going to start working on shortly. In the meantime, we do always cover the important events that are affecting alumina, so from the upstream impact on an ongoing basis in the monthly reports, essentially.
Jensen, would you like to comment on that? Just an extension of the bauxite pricing side?
Right, yeah, thanks, Jarek, Karen. So yeah, here at Platts, because we constantly review in terms of market fundamentals as to what prices assessments, spot price assessments would be suitable for us to assess based on spot market fundamentals, whether there's liquidity in the market and how often we assess them. So can assure you that it's reviewed on an ongoing basis. And if we do reach out to you for, let's say, questions or updates on bauxite specifications, hopefully we get your support in terms of the to provide some of these specifications. Thanks.
Thanks, Jensen. April, keeping on the theme of bauxite, are there other regions that can step up if Guinea bans a lot of bauxite exports?
Thanks for the question, Jarek. Actually, it depends on whether the solution we're looking at an immediate and temporary solution. You have to look at the next big producer, and in that case, that would be Australia. Currently, Guinea produces around 130 million metric tons. And in comparison to that, Australia produces around 100 million metric tons. But if we were to look at a more sustainable and longer term solution for this, I think they should look at who are the next big, who are the countries that have like the next big reserves. Australia also belongs to that. It is being topped by Guinea, but other countries that that they should look out for is Indonesia, which has a 2.8 billion metric tons of bauxite reserves. There's also Brazil at 2.7 billion metric tons of reserves, and also Jamaica. But of course, this will take a little bit longer because of development. Actually, of a mine takes 1 to 3 years. But if they have, like, for example, an even longer time to actually plan for it, they can also look at the countries who have the biggest resources. But this actually entails for those investors to conduct a more conduct a feasibility study to check whether those resources would be technically feasible and economically viable to extract and convert into reserves. So it actually depends on whether it's a short-term solution they're looking for or a long-term solution here. So I hope that answered the question.
No, good. Thank you very much. And we're just going to remain, actually, well, move a little bit to Indonesia. And Jensen, this question is for you, given your expertise and the work you've done in Indonesia for the last few years. We've also got a number of questions focusing around Indonesia and their role. What has Indonesia done in terms of downstream developments for other minerals? And how would we see that being translated to the aluminium value chain?
Right, yeah, thanks, Eric. So in terms of Indonesia, of course, the focus would be downstreaming. In Bahasa, we see this word hilirisasi popping up very often in terms of policy to encourage investments into the downstream sector. So I think one of the more pronounced commodities that we see this happening, of course, is in the nickel sector, where they banned the exports of nickel ore and successfully attracted a lot of investments into Indonesia for the nickel processing, whether it's nickel pig iron, metals like MHP, as well as even like battery precursor making. So we do see them trying to replicate this success into the other sectors, whether it's copper, whether it's for aluminium. For the case of aluminium, of course, we have the bauxite exports already being banned exports. And we do see similar trends of more Chinese companies or other overseas companies coming in to invest further downstream into the alumina and primary aluminum space of a production. So we do see this trend expected to continue. Of course, not just due to the policies itself, but of course, also another reason is because Indonesia has very good reserves, strong reserves of bauxite itself, which encourages seaborne investment into the space and allows for, I would say, secure supply of upstream material on the bauxite space. And we will expect to see this being reflected similarly in the aluminium value chain itself. We already have the projects mentioned earlier from myself, Karen, April as well, from whether is it Mempawah, whether is it Xinjiang, Bintan. We have pressed metal coming in as well for the next refinery. A lot more other projects on the alumina and aluminium side, Ligen as well, PT Adaro in Indonesia. So we do see this trend continuing due to the policy-wise is one thing, but of course the support of existing resources or raw materials on the bauxite side that is secure for the domestic market.
Excellent work, Jensen. Thank you very much. I'm going to pivot a little bit. I'm going to move into pricing. This one for you, Karen. Question is, do you agree that real end user aluminium prices will be defined by premiums rather than official LME prices in the next few years? What is your take on that question?
Yes, I'd broadly agree with that. Actually, in terms of our price forecasts, we are not predicting significant changes from where we have been last year. This year is pretty much unchanged for our forecast. And it is the Midwest premium in particular that is going to be the main driving factor for the prices for consumers. Obviously, on the LME, there are at times stock churns and things like that that affect the cash price to some extent more than the 3-month price. But overall, it's a pretty flat picture, as mentioned, till about 2027. And yes, it's the impact of the tariffs and the knock-on effects of that, with the Midwest premium in particular likely to remain elevated, although with potentially trade talks going on with individual countries and regions having some moderating impact on that in coming months. But yeah, it's definitely premiums at the moment.
Thanks, Karen. And we have time for one more question. Jensen, inevitably I'm going to go talking into something around energy transition. So we'll be looking at low carbon aluminium. So do you see, or is there, or why is low carbon aluminium demand picking up? And would this spur more investments into renewable powered aluminium smelters?
Yeah, I think we touched on this briefly earlier in terms of the demand side, of course, coming a lot from the automotive sector, where there are some commitments to including low carbon aluminium into the production of the automotive vehicles. And we see a lot of companies, whether it's the aluminium producers or also aluminium consumers. Like, for example, like automakers on BMW, we have EGA increasing production of Celestial to supply to Japan. We see a lot of these deals or negotiations or agreements being done. So we definitely do see demand side picking up on one hand. But on the investment side, of course, in terms of production of low carbon aluminum in Asia, we do know that a lot of these production that is able to command the premium, these productions were already low carbon in the first place for hydropower, in whether is it Malaysia, Russia, Indonesia, New Zealand, for example. So we haven't seen these premiums being able to sort of spur new investments into more low carbon or hydropowered or solar powered or thermal powered aluminum smelters for a lot of the new smelters regionally, whether is it in Asia, Southeast Asia, or Asia as a whole. A lot of these new smelters are actually still not being earmarked as renewable powered smelters. So I would say at this juncture, we don't see that specifically spurring investment, but down the road, when the premiums, if they increase further, or if we do see a lot more larger volumes of demand coming from Asia itself, then that may be the case. But at the point of time, currently, we actually don't see these smelters commanding, I guess not committing to a more renewable powered production, I would say.
Thank you, Jensen. So with that, that concludes today's presentation. On behalf of S&P Global Commodity Insights, I'd like to thank our presenters for sharing their time and expertise. But most importantly, I'd like to thank all of you for joining us today. Thank you and enjoy the rest of your day. Have a great weekend. Please stay safe and healthy. Thank you very much.
Thank you.